Hello and welcome to the look ahead for Wednesday, the 9th of April with me, Fiona Singotta, Senior Market Analyst at City Index. So big focus tomorrow will be on Trump's implementation of his reciprocal tariffs. Just to run through what else we'll be watching, overnight we've got the RBNZ interest rate decision. We also have tomorrow in the European session, the Bank of England's quarterly bulletin along with the FPC report, and in the US we will have the minutes to the FOMC meeting last month. So just to kick off though with Trump's reciprocal tariffs, what are we expecting? So the universal tariffs of 10% came into effect as from April the 5th. The reciprocal tariffs, which Trump applied to particular individual countries, including a 20% reciprocal tariff on Europe, a total of 54% on China, as well as very high rates on the rest of Southeast Asia, and 24% tariffs on Japan. They will all come into effect tomorrow on the 9th. Now, just one thing that we will particularly be watching is what's going on with China, because today, obviously, we've also, at the end of last week, the timelines here are fairly busy. End of last week, China announced reciprocal tariffs of 34% on US imports into China. Trump has since today, late yesterday, threatened Trump, or he's very much doubled down on China's tariffs, saying that if they don't remove those reciprocal tariffs by tomorrow, that the US will put an additional 50% trade tariffs on China. So China have vowed to fight till the very end. So there really is a sense that there could potentially be very much an escalating trade war between these two major economies, the world's two largest economies. Now, this is obviously a concern. However, we did hear Trump say today that he is waiting for China's phone call, which would suggest that potentially he is open to negotiation. We've also heard today that the Treasury Secretary Besant will be leading the trade talks or negotiation talks in Japan. So there is this slight sense that actually maybe these figures aren't so final, but actually we will see tomorrow what happens and if there's been any progress as far as sort of reciprocal tariffs are concerned with China and or other countries across the world. If they've managed to agree lower rates, this could still be work in play though. So we did see a bounce today that we can see. This is the NASDAQ that we're looking at. Just bear with me. Let's get the NASDAQ back up there. The NASDAQ. This is the NASDAQ that we're looking at here. There we go. And basically, we did see a very big fall yesterday on Monday at the start of the week. We've seen that recovery happen today. The recovery has lost a little bit of strength, but that recovery has come on optimism surrounding the fact that Trump might be open to negotiations. But also, let's have a look here, very much a technical recovery as well. We saw the US S&P, the NASDAQ, Dow Jones, a lot of markets were very much in oversold territory. So we have seen that bounce. Obviously, there is a very long lower wick on this candle, which suggests that there was little selling demand at those lower levels. However, this potentially is looking to be more of a dead cat bounce rather than an absolute recovery in the market. We would need to see either Trump rein in or walk back some of these tariffs, or central banks stepping in to support the economies in order for there to be a more sustained recovery in the markets. Otherwise, we've still got this potential of uncertainty, and the market's very much attempting to work out sort of what this means as far as valuations are concerned, in addition to any sense of risk off that there may be. Just watching out here as well for the 50 SMA could be looking to cross below the 200 SMA in the coming days, which could point to a death cross, which is points to sort of further weakness, at least in the near term. So levels to be watching. We're going to see, as I said, we've seen heightened volatility. We've got the long lower wick on the upside as well, suggesting at these upper levels there was little buying demand as the market's waiting to see what happens tomorrow. On the upside, we do see a walking back and potential sustained recovery. 18,300 is the next level that buyers will need to be looking to get over to bring the 19,000 into focus. On the downside, we've got this level around here, 17,000, sort of 650, 700. That's the low that we saw here towards the beginning of August. That's what to be watching as well on the downside. So another market just to keep an eye out, obviously, is gold. Gold hasn't been benefiting from its safe haven status in recent days, but I mean that is on the back of a very strong rally across the start of this year, and in fact across the previous few years, in fact. So the fact that we have seen a slight pullback from that all-time high of 3,167 is hardly that surprising. We do, as I said, mentioned to have the FOMC minutes tomorrow. However, they will feel to be rather stale, given the developments that we've had since the FOMC meeting back in March. Let's not forget that the Fed pointed to 2 rate cuts. Then the market's now considering potential of 5 rate cuts this year from the Federal Reserve. So a big change depending on how much the US economy is hit by this uncertainty and by trade tariffs. And obviously how sticky the impact of, or what the impact of sticky inflation could be on the back of those trade tariffs. So this is gold, ran into that resistance of 3,167, rebounded lower to this point here, which is the rising trend line dating back to the start of this year. Also the 50 SMA, also the static support of just over 3,000, which 2,950. So that was the high that we saw in February. Managed to hold that support. We have seen a little bit of a jump higher. So, I mean, this level is going to be pretty key in order to see what happens next. If we get a break below that, that would then open the door to this level here, which is the 2,880 level. If we find that that does hold, then potentially on the upside, looking to around 3,000, 3,050, 3,058, which is the high that we saw back at the 20th of March before heading towards fresh all-time highs again. Also, let's have a look at USD, Japanese yen. The yen has been one of the safe havens of choice. Along with the Swiss franc, and also the euro has done pretty well from recent US dollar weakness. So, if we do get that risk off mood again tomorrow, because these trade tariffs are going through, because there's few signs of movements and negotiation, then this could be one of the currency pairs which actually, or should I say the yen could benefit, which could see the US dollar, Japanese yen fall lower. I mean, it's currently trading around here, which is this level around the 147 mark, which was the low that we saw at the beginning of March. It's a level that we've seen at the beginning of September as well last year. So it's a key level as well. If we get a break below that, then we'll be watching out for 145 on the downside. That's where we've seen sort of the price testing support this week. Long lower wicks on the candle suggest that there's little selling demand at those lower levels, but that's what we're watching for. RSI is below 50, so supporting further losses, and it's remaining back within this descending channel. On the upside, watch out for 148.60. That's the low that we saw here back in December. And above that, we've got this level here, which is around 150, which is the 200 SMA, and also the high that we saw in March. So just finally then having a look at sterling. As I said, we've got, we do have the financials, Bank of England bulletin, which is due tomorrow. Be watched for fresh insights into the economic outlook and sort of potential policy adjustments. This is the pound. It's fallen very sharply against the US dollar, dropping below the 200 SMA. It's actually testing the 50 SMA around the 127.30. That's where we found support. And basically, what we have going on here is that there are concerns that actually the secondary impact of the Trump's trade tariffs could actually weaken the the UK economy, and that will also potentially mean more rate cuts from the Bank of England. So there is the sense now that maybe the Bank of England will be ramping up rate cuts potentially in the second half of this year, although the market is now looking at a rate cut in May, which was being priced in at around 70% prior to Trump's trade tariff announcements. It's now pretty much priced in for that 25 basis point rate cut. So as I said, as far as this is concerned, that's added weakness to sterling, even as we've seen some weakness in the US dollar amid those recession concerns. So as far as levels to concerned, 128.25, 127.25, that's the support of the 50 SMA. That's if we get a break below there, then you want to be watching out for 126.40, the 100 SMA, ahead of this one here, which is 125.60. Any recovery, should we find that 50 SMA holds, buyers need to get a move above the 128.10, which is the 200 SMA, in order to gain any sort of momentum back up towards the 129 and 130 levels. But yeah, for the time being, these bearish engulfing candles, they do look a little bit dubious when you're combined with the RSI below 50, but just depends on how we behave around that 50 SMA. So that is everything from me. I hope that you've liked what we've seen. And if you do, then please do give this video a like and please do subscribe for more.